What up, guys? I am Stock Sniper Mike, and we're back again with another 2-minute drill. And this week, we are going to start off with good old Dick's Sporting Goods. We got some bad news out of Dick's Sporting Goods after they came out with earnings this week, dropping from $150 down to $106. If you're a long-term investor, you're definitely sweating and wondering what exactly happened. But if you're a consumer and you've walked into Dick's Sporting Goods, you just have to look around and say, holy shit, there's a lot of inventory in here. And that's the exact problem. Too much inventory and not enough consumer spending, not enough demand out there. So way too much supply, not enough demand in Dick's Sporting Goods, and that's what sent the stock price soaring all the way down, over 15%, like I said, from $150 down to $106. It did slightly bounce that closed the week, but only up to the 110 area. So we still got a long way to go if you're a long-term investor to come back to what it was 2 weeks ago. On the bright side, we had technology stock Nvidia, NVDA, making a crazy rally. If you're a long-term investor there this year, you are more than stoked and excited. It went from the hundreds and just touched $500 this week after coming out with earnings. The chip maker is big with all the AI and computer technology that's coming out. It seems like that's where the world is turning, and Nvidia continues to climb with the news. On Friday, we had the big Jackson Hole meeting. It's a meeting where the government meets up and talks about what is going on with the world. The federal government came out, Senator Powell came out, and he said, unfortunately, we're going to continue to raise hikes because he is not impressed with what's going on with inflation still. So right when we think the coast was clear, as the market continued to spike this whole year, it looks like we might hit some rocky roads in the upcoming months. The market did fall down pretty sharply after Powell spoke at 10:05 a.m. Eastern on Friday, but it did tend to rebound to close out the week, and it actually closed the week green. So we'll see exactly what's going to happen in the upcoming months, but interesting to see that we're going to continue to raise interest rates as mortgages now are at its highest rate, above 7%. Credit card bills are going crazy. So interesting to see what exactly is going to happen in America. But we're always going to be along for the ride, steady, stocking snipes, and sticking to the plan. And that's what it's all about, guys. So this one was a quick one because this week was a slower week. We always say on the slower weeks, protect the boat. Definitely protect the boat on weeks like these. You don't need to go out and use all your capital because you want to have your capital when the good times do come back around. So these are times to step away from the screens, do things you like, go out, play sports, take a walk, whatever you like to do. This is the time you want to do it in slower times like these. Hope you guys enjoyed the quick 2-minute drill. We're here every single Friday for nice table talk over the weekend. We got some football starting this week. Very excited. Saturday's our first college football, and then next week we finally are coming into NFL football. So very excited to start some brand new football for the year. Let's get the season started. Let's go Florida State. We'll see you back here.